Let this sink in for a moment. The lack of financial education cost Americans $450 billion in 2021. 78% of American homeowners are living paycheck to paycheck. And right now, most American homeowners are equity rich and cash poor. That's another word for broke. The media isn't helping you. Schools aren't helping you. And the government for sure isn't going to save you. As a top 1% mortgage professional and seasoned investor, I cannot sit around and watch these life-changing skills that I've learned outside of traditional schooling be unused, untaught, and thrown in the trash can. So until these statistics change, I'll be here every single week, preaching and teaching personal and professional finance, information that you can use in your life, however that looks, whether you are 16 or 60. Hey, welcome back to another episode of the Happy Homeowner Podcast. I have a really great guest today. We're going to talk about an area of Snohomish County I've yet to talk about on the podcast, but I have a lot of clients that find themselves moving to this particular area. And so before we get started, I want to, if this is the first time you're listening to this or you've listened to before and you've kind of forgot why I do this, the Happy Homeowner Podcast is designed I made this 3 years ago for my clients that I've helped in the past, just so they could kind of keep up to speed on the market. I could give them some tips on home ownership and how to come out the other side of their mortgage in a better financial position. So I'll bring financial planners in and economists and incredible real estate agents like Greg to help you better understand the market and make the most of your journey, your home ownership journey. And so today we're going to do exactly that. Now, you're going to learn something different today about an emerging part of Snohomish County. And so if you haven't purchased a home, or you may have purchased a home and you're interested in more information specifically on the Stilly Valley in Snohomish County, I want you to reach out to Greg. I want you to reach out to me and we'll get you more information. But we keep this right around 15 to 20 minutes of just real good information so that you're armed with enough information to maybe reach out to Greg or myself for more. And so, Greg, I want to make sure I pronounce your last name. Is it Byrum?
It is. That's correct.
Greg Byrum with Windermere Real Estate in the heart of Stilly Valley too. So explain to us real quickly, what is Stilly Valley? Okay. I know because I grew up in that area and I absolutely love it. Well, what the heck is the word Stilly and what is the Stilly Valley? And then I'm going to ask you right after that, how long you've been in real estate, how you got into real estate. But let's talk about Stilly Valley first.
Sure. Stilly Valley is basically named after the Stilligwamish River. It's all the cities that run next to it. And so that would incorporate areas like Arlington, one of the largest cities by miles in the state. It's also Stanwood. And then there's the new developing and emerging Lakewood area, a lot of growth up there. And then a little area called Silvana. So that's the Stilly Valley.
So the Stilligwamish River, beautiful river, flows through a beautiful community. Specifically, when I think of Stilligwamish River, I think Arlington, and then I think of Stanwood because the river flows, obviously, rivers come from streams and from the mountains, and It flows down through Arlington. It does split a little, but it comes out and pours into the beautiful Puget Sound right there in Stanwood, correct? Is that right?
Yes.
Yeah. So we've talked about, I personally have talked about Camino Island. That kind of is in that area where the Stilly River comes and runs through there. But these three or four, I think you mentioned four, with Silvana being probably the smaller of the four. These four communities, I can tell you from a finance, having, funded a lot of mortgages in these communities, these are emerging markets.
Absolutely.
In Snohomish County, especially the north end of Snohomish County. So let's talk about those, but real quick, we have a veteran here, you guys, a veteran real estate agent. He's been in the industry for a long time, lives in these communities. So one, I'm always curious. People are always like, you ask so many questions. I was like, that's why I have a podcast. I get to ask more questions. But what got you into real estate and how long have you been in real estate?
Alrighty. I've been in real estate 8.5 years. I'll start with that. Mm-hmm. I had purchased 4 homes on my own with my wife prior. My brother was doing fix and flips before 2008 when the market totally shifted. And 28 years at my current employer, but I ended up injuring my back in 2014.
Okay.
And when I injured it, after being at my company for 28 years, my doctor physically said, go get a sedentary job or you should do this from a wheelchair.
Wow.
So my real estate agent actually said, Greg, you are so good at selling stuff on, at the time, if you remember the little nickel press.
Oh, yeah.
Putting on stuff, a little nickel, Craigslist, OfferUp came out to being, and I was just successful in selling stuff. And people would ask me to sell it, selling ice to the Eskimo. So that being said, she said, why don't you give real estate a try? And I gave it a try, and it's turned out to be very well.
Yeah, you're a heck of a connector. I feel like you're everywhere. You do a lot of events in Arlington. So let's jump into the Stilly Valley. If someone is unsure of not only Stilly Valley, but they've heard of Stanwood, they've heard of Arlington, but they don't know a ton about it. What makes the Stilly Valley, these communities, so unique right now in 2025?
I think the biggest thing is as we have an urban sprawl across the state, that area is kind of protected by the natural boundaries. You got all the rivers, you got the hills. The county is very good about keeping its green space, so it kind of forces it to keep that country feel.
Right.
And, you can watch plenty of movies on the Hallmark Channel, and everybody wants to live in this little Hallmark town. Yeah. And these afford that opportunity.
Yeah. So I'll give you kind of a real quick overview, and I know Greg's going to talk more about this, but in these communities, these are communities where you could have your traditional residential neighborhoods, but then you also have the unique ability in Snohomish County to have 1 acre or larger lots, with a shop or maybe some farmland, stuff like that, right?
Exactly.
Yeah.
Yep. You got to know the septics and wells. You got to know your setbacks and that kind of stuff. So it's
Yep. So if you're looking for a house, or if you're looking for more of that country kind of my farmhouse or country type feel, these are communities where you can get that. I will preface, you want to be careful in some of these communities as you get closer to the river. The Stilquamish River does flood in certain areas on the lower side. So there's flood insurance that's required. That's a whole different conversation. In fact, I'll most likely in the next month have an insurance agent come in and talk about that. And FEMA's updated their floodplains, stuff like that. But the majority of these 4 cities is not in a floodplain. But just recall, as you look at homes closer to the river, that's something to be cautious of. So market-wise, in these markets, what you've seen over the last 8 years, is it growth and development? Is it, hey, property values have really gone up over the last, 6 to 8 years? Or is it just kind of slow and steady?
Oh, you say, have they gone up? Absolutely.
Yeah.
Hands down. I can remember going out to the Arlington Heights area, and you look at a home out there in 2017, 18, when I got licensed, $375 for something on 5 acres was like, oh, I can't afford that. You can't even get close to that. You're talking $1.3 million for that same home. So you want to talk about growth. Yes. COVID era was definitely something that set when people got locked into their apartments and in their big buildings in the city, and they were able to work from home. They just said, get us out. We want to go do something outside. And so anything with the land, acre or greater, all of a sudden became a vault for a seller or an owner. And then, people with outdoor enthusiasts, they got their quad, they got their 4-wheel drive, their boat, all their toys. They need space to park those. They don't want to put them in storage. So why not own the land with it? And so that's really what turned Arlington, that area with all of the land that we have up there, into just a hotbed.
Well, and I'll tell you too, Arlington, Stanwood, Lakewood, great schools.
Yes.
All of them have been remodeled. All of them have been upgraded, expanded. I know Lakewood just recently went through a big renovation.
Oh, they need to, because all the growth happened there on 172nd.
And Arlington now is a powerhouse in sports, just a beautiful community. And same thing with Stanwood. Stanwood, I joke, my daughter was playing volleyball a couple of years ago, and I went there and I was like, this is like a mini college campus, like the gymnasium area. And as you see it, whatever that highway is that you drive by the high school and you see that, it's incredible.
Well, to Stanwood credit, they're the only one up there that has a YMCA. We would love to have one in Arlington, and we're hoping for one. But Stanwood has that, so that's a little drive for people who maybe the silver sneakers or the nice new homes up there. Absolutely.
So each of these communities, specifically, I would say Stanwood and Arlington, they're beautiful communities, large communities, like I said, with residential neighborhoods, but also some lots with acreage and some bigger and some nicer homes on it. But both of them still have that downtown, old school, old fashioned, old town feel, right? Downtown.
Absolutely.
Yeah.
We just had a lady come in this week into our office asking about that. And she said, I just walked the coffee shops in Olympic Avenue.
Olympic.
It's not very long.
Yep.
But she walked it. She says, it just feels like a Hallmark town. And I'm like,
it is.
Well, thank you. We appreciate that.
Yeah. Both of them have great farmers markets in the summer. Highly encourage you to come out and give each of these communities kind of a test run too, if you're interested. So, all right, let's talk about things that you're really privy and smart at. And it's like, what is a seller's market? What is a buyer's market? Number one. So I want you to answer that question for my listeners that they might hear it in the media that, oh, hey, we're in a seller's market right now. Well, what the heck is a seller's market? What is a buyer's market? And then, is the Stilly Valley in one of those markets right now, and which one?
I would say we are in a buyer's market simply by two factors. Number one is buyers are just being very cautious right now. And so when they're not purchasing, those homes that are sitting on the market end up stagnating, if you will. And then the agents, we want to be diligent and get more listings. Those begin to populate. Now we have that inventory supply and demand problem. So it's not really a problem. It's just like buyers can be more choosy.
Yeah.
So that creates it. And then we are seeing what used to be the 10, 14 day on market. That was a really good time. We're pushing upwards of 33 days on market now. And so that, we got an anxious seller who has to move in a 30-day period. They're likely to take a concession or do something for the buyer to get this done. Yeah.
Maybe a quicker price reduction, maybe more concessions to the buyer. They're more motivated. And that's kind of my message right now. And this is a message in Q4, and I could pretty much cut and paste this and repeat this every Q4 with the exception of a few, which is very, very rare. Q4 is a holiday quarter. It's we're pretty blessed up here in the Northwest where we don't get below freezing. Like our economy doesn't shut down in the winter like some markets across the U.S. But nonetheless, people tend to pull back and chill out and enjoy the holiday season and be with their family.
Right.
However, real estate doesn't sleep. People pass away. People get new jobs in other states. People unfortunately get divorced. And a lot of these different life events cause real estate activity, need to sell. And so I encourage, as a mortgage professional, my clients right now that are pre-approved, I'm encouraging that this is game time. This is an opportunity of a lifetime, Q4, and go out and just see don't buy the wrong home. Right. But if a home meets your criteria right now, this is a great opportunity right now based off of just pure data, like what Greg just said. Hey, Q4, there's a reduction in real estate activity, number one. Number two, we see a 1 to upwards of 10% reduction in sale prices or credits right now being applied to buyers. And so there's some motivation and seller motivation. So that defines more of a buyer's market right now. Are there different niches in these 4 different cities of Stilly Valley that where maybe it might be a little bit different, where sellers still have the advantage, type of property, stuff like that where it might be different? I
appreciate that question. Yes, that is. So when you talk about the niches, you have the niche of the right agent understanding, because we have the land.
Yep.
We're not hooked up to the city sewer system.
Right.
We have septics. We have something called a well, not the guy running out with a bucket and cranking the thing up. It's, you hopefully got a system that's going to be in place. So that's generally required when you get your person to your realtor to look into that. That is my niche. We have a lot of manufactured homes up there too. And, for quick credit, your team closed on one of those that we had up there. And doing that's a very fine-tuned thing to do when you have a manufactured home, septic, well, and then having anything else on the property that might be of, in an encumbrance or an encroachment, making sure that's taken care of. It's because we have the land up there.
Yeah.
The niche that the sellers have is they have the land.
So
we're coming back to the same answer. Yep. We have the land, and people love that effect. They just like the idea of being able to not have an HOA. Some people love them, like move into Glen Eagle. Crown Ridge, any of those. And if you want that, that's great. But again, a lot of people come up because we are that rural spot.
Yeah.
And you can do what you want. Truthfully told, a lot of people put their kids in a park model or something like that next to their shop.
Right.
You know, permits aside, it's just this is what they do because the land affords that.
Yep. And then one thing that we don't need to go too deep on, you just mentioned well a minute ago. So the Mount Pilchuck water table is one of the best water tables in the country, and that's why wells are so attractive. You can dig and you can find water, which you can, and they're fairly shallow. I mean, I anytime I stay in the know when I'm working with clients that are buying properties with a well or builders that have to dig. I kind of stay up to beat on that, and I'll tell you what, Jenny and I, my wife and I, lived on some acreage on a well early on in our marriage, and boy, I'll tell you what, one of the best, some of the best water I've ever drank, and pure.
We are blessed in the Northwest to have good water and to have water. Period.
Yeah,
had clients from Louisiana or Arizona, and I'm like, Lake Mead, watch that table come down.
Yeah, nothing beats fresh mountain water. So, all right, let's talk some stats, and then we'll wrap up here. So there's certain data and statistics that help define a market. One is, you mentioned earlier, days on market. Yeah. And then I always like to, when I'm talking with my clients, because sometimes my clients will have conversations with me that they won't with a realtor. Like, how do I get the best deal? Or I want a deal on this home. And the definition of a deal is different with everyone. Sometimes the consumer thinks it's price. Oftentimes it's not, right? And so one of the metrics I like to also look at in regards to getting a deal outside of days on market is current list price to sales price. So and then the other thing too, just so our listeners have an idea, if you have access to this data right now, that'd be great. Is what is like the median sales price? Like, what can someone expect if they wanted to, hey, I really love this community you guys are talking about, I want to look into it. What is like the average or the median sales price in Stilly Valley? So let's talk about that first, if you have that info.
I do. Yeah.
And then let's go into days on market in these communities, and then list price to sales price.
Sure. So as opposed to a year ago, it was a little bit higher, not much, but 691,000.
Okay.
Is our current median sales price in those four areas.
Okay. 691. So very affordable. Again, you guys, I've seen beautiful homes on 5 acres sell for 1.5 to 2 mil. So median is middle. We're kind of, there's some prices you can get into Stilly Valley below that. You can also get in above.
So how I determine that median is I like to tell clients like this.
Okay.
Remove the fixer flipper.
Okay.
Remove the Taj Mahal.
Okay.
Your median becomes in the middle there.
There you go. Yeah.
So the average would be different. Average would be a little bit less on this factor.
Okay.
But for median price, just for the common person watching this video, just we're getting rid of the fixer flipper, the guy that's investing and making a horrible deal, and then somebody who's got something that everybody wants but nobody can afford.
Okay.
So
I love that. All right, let's talk about days on market, list price and sales price, current, and then we'll go in the past so we can kind of compare and contrast.
Sure. So currently we are about 33 days on market up in our neck of the woods.
Okay.
The idea behind the 33, I just averaged out over the 9 months for from January to now, and we're seeing just a slow, gradual uptick. One unique thing is October has actually been a more positive month.
Okay.
So when I ran my stats for all the other months seem to be increasing on days on market, but October actually has flatlined. I just heard from Jeff Tucker, which is our chief economist today, that we don't have data from the federal government yet because of the shutdown.
We're in a shutdown,
But however, the stats that he sees, being Windermere's economist, is it's pretty good for October. Now, November could be a different story. We don't even talk about that. But for October, that's a positive thing.
Okay.
So, and then, lending rates, what are we, right around 6%? So a whole nother conversation. But I think we're maybe just under that. But I'll let you speak to that one.
Low sixes. I mean, we're kind of we're not seeing a ton of activity every day because October 28th, 29th this month, Fed meets. And so, with the government shut down right now, we're not getting the jobs data that we want. We're not getting some of the data because it's provided by the government.
Yep.
And so they're kind of hedging. I think Wall Street and the Fed is going to hedge what they think based off of some previous reports and some activity. The consensus is like a 90+% chance of a 0.25 drop, Fed rate drop this month. But hey, they could swing for the fence and give us a half and completely change the game. So the markets really aren't doing much. But I'm telling people right now, I mean, so much goes into an interest rate quote, but 30-year fixed rates are, 6.25.
Yeah, well, when you have a home at 33 days on market and you come in and you've got your lending all dialed in, you could swoop in and make that offer. That's my point to my clients is make that little bit offer that will hedge in your favor. The seller could bite just because of that 33-day on market.
So 33 days on market. You mentioned last year it was about 28. Mm-hmm. So you guys, not a huge difference.
No.
30 days historically, man, this is going to be my 19th year in finance. 30 days on the market. I know the last 10 years we've been just super, super, super spoiled, right?
Throw COVID out the window.
Throw it all out.
Let's just get rid of that.
Yeah, a lack of inventory, low interest rates. But you know what? 30 days on the market in the last 20 years, 30 years, it's very good. Yeah,
absolutely.
So, and I'm very, very optimistic about 2026. So we talked about days on market. Did we lock down list price to sales price again year over year?
Oh, I apologize for that. List price to sales, but I'd found it out this morning. We are at, there it is. We're not far off.
Okay.
99.4%. So just a touch under,
There you go.
It's not bad.
So 99.4% of list price to what the actual home sold for. Okay, now listen to me, please. When clients come to me and they're like, Dan, boy, my dad said or my grandpa said, we should offer $50K below ask price. I listen. I smirk. I'm also a real estate investor. I would love to buy a home $50,000 below ask price. But I say, okay, here's the deal. I'm your lender. I want you to go talk to your realtor. I want you to go talk to Greg. And I want you to go look in the communities that you're looking in right now. And I want you to ask him, like, for example, let's say they're looking in Stanwood at $1 million. Greg's going to run some numbers, that price point, that area in Stanwood, and he's going to give you those exact numbers. If the home is selling for 99.4% of list price to sales price, you are going to cripple yourself, and you're going to make the process super muddy if you're trying to get if you're trying to offer $950. You hear what I'm saying? And so you can have a educated conversation with your realtor. Now, if your realtor can't help you define this and help you better understand this, you're working with the wrong person.
Yes.
So if your home is listed at $1 million and you want to go take a huge swing like the Seattle Mariners do every time they're at bat, sometimes they connect, but they live and die by the long ball, right? If you want to take a huge swing, you're probably going to miss because the data is going to show you at $1 million, you're probably going to buy the home for $1 million.
Yeah.
In those areas.
And to your point, I think you'd be better off getting as close as you can to that list price, but ask for the concession because all the seller sees is that number, correct?
Yeah, that's it.
I got close to my list price.
That's it. So great advice there. So I'm going to talk about some numbers real quick. You're probably curious. Greg mentioned median sales price right now. What was it again? $691. Okay. So $691 to live in Stilly Valley. What does that mean? I'm going to tell you what this means, and you're going to find this fascinating. So I'm going to reverse engineer from $691. What would it take to buy a home at $691? So right now you need to understand the average down payment in Snohomish County is 5% down. It's actually a little bit more, but let's just round down to 5%. So you buy a home at $691, you put 5% down, you're in a home for less than $40,000 down payment. Yep. Total monthly payment is going to include principal and interest, property tax estimates, homeowners insurance estimates, and private mortgage insurance, because you're not putting 20% down. So I'm going to add all that up. I'm also going to assume that you're not debt free. I'm going to assume that you have like $500 a month in revolving debt. So I'll reverse engineer there. I'll add $500 to that. 45% debt ratio. You're looking at about $13,000 a month in total household income to qualify at about $691 with 5% down. That's about $140,000 a year in total household income to buy in this area. Now, again, You can buy higher, you can buy lower. You can buy at this price point and put down a bunch more money, and that messes with those qualifying numbers. I'm just giving you some estimates here. And one last thing, because this could get shared on social media, I want to stay in compliance because I did talk about some mortgage numbers, and these are just estimates, not quotes. I didn't even give out rates. We were using a ballpark estimate of like 6.25. I want to share my MLO, my National and Washington State Mortgage Originator's License Number. It's 115349, and I'm with New American Funding. Back to the show. So, but I had to do this to stay in compliance. So, if you make about $12,000, $13,000 a month, and you want to put 5% down, you have $40,000 down. Yeah, no problem buying in the $690,000, $700,000 price point. You're going to get a nice house in an incredible community out here. So I want to encourage you to reach out to Greg if you want more information. You want more budgeting information, reach out to me. If you want to learn more about Stilly Valley, I want you to reach out to Greg. Now, I want to end the show, and I do this all the time whenever I have the opportunity to have you got a little desk placeholder here. Greg's one of the top agents in Arlington, in Snohomish County. He's with Windermere, one of the top in his office. And whenever I get an opportunity to sit down with high achievers and high performers in real estate, I always ask a couple of questions that I know you're going to get a lot of value out of. The first is, if you had a client right now that came to you and said, Greg, we're not ready to sell right now, but we're going to be selling in the next 6 months. So that puts us in the market about April, May of 2026. What's your best advice to them right now that they can do to start preparing their home and preparing their lives to sell a home?
Well, I'm going to assume that they've haven't called a realtor. Number one, I always encourage my clients to interview 3 realtors. And it builds a trust factor because they realize it's not about me.
Okay.
It's about their success. Because there's questions that those realtors, when they come in and interview, they fail to ask questions such about title, about capital gains. They fail to ask questions like that. So that's the first thing, is interview several agents. They generally pick me because they're enamored by the information I provide. You're going to get a plan. Follow that plan from your realtor. They might give you a task list of about 13 things to do.
Yeah.
Don't overwhelm yourself. Do one a week.
Right.
Just get one done a week. And then lastly, stay loyal to your agent. You're going to hear lots of stuff. You're going to see stuff in the media. And the media, you got to understand, just doesn't really get it. They're not the professional. You've hired a professional for a purpose. So how should you prepare? Your realtor is your key. Your selection of your realtor is primary.
Yeah. Yeah, I love that. I saw a meme on social media the other day, and it was funny. It was a guy with his hand on his face looking at a family, and it said right on, nice job. You left the largest financial transaction of your life up to an online internet discount broker that would do it for 1%.
Thank you for saying that.
And I thought it was funny because it happens in my industry too. People go to the internet and they'll shop for mortgages, and we're just not the same. The experience isn't the same. The advice isn't the same. The process isn't the same. And at the end of the day, most likely, if on the internet or someone else, they're willing to offer something that's much lower than what we're willing to offer, for example, our rates, I think our rates are extremely competitive. If it's lower, you're just paying more points or you're paying more closing costs to lower the rate, which you could have done with me. I just don't necessarily lead with that because it's not always the best financial option. Right. Why would you pay $20,000 in extra closing costs to lower your rate right now when I know good and well within 6 months to 12 months, the market's going to be lower and you're going to have an opportunity to refinance? That's a waste of $20,000. So just like you, it builds there's a level of trust when you walk people through an advice-based process versus a transactional-based process. And guys like Greg and guys like myself, we do exactly that.
And I put it like this. A person who works in your car and polishes your car and details it, they're really good at it. But would you ask them to negotiate your next car purchase?
No.
Just because they know about cars? No.
Yeah.
Same thing with a realtor. Yeah. Just because your neighbor sold their home doesn't make them the trusted advice.
Yeah. Yeah.
You get the right realtor and then follow the plan they give you. Don't stress it. Just do one at a time. And it will come to fruition.
Yeah. Well, when you're in the market like you are, there's a level of confidence and there's the level of advice that you're able to give your clients that someone that's not in the market full time every single day can. Absolutely. Okay, so let's switch gears now. Yep. Same situation, but it's a buyer. You got a buyer that's thinking about getting into the market in early mid 2026. They're starting now. What's your best advice for them?
Well, after they call the realtor because they're thinking about buying, the first thing I always do is point them to my lender. There's a reason for that.
Yeah.
It's twofold. My lender will likely be able to obtain the information so we can do more follow-up. And then we are in a joint relationship to help that buyer dial in exactly what is as I call it, the credit card for your home to purchase.
Right.
This is your maximum value.
Yep.
I don't know that number. I'm not going to ask for personal information.
Right.
I leave it to, New American Funding to do that.
Yeah, I love that, man. Yeah, and I think you start off on the right foot because now your clients and you can operate within the boundaries of a budget. And then that budget is backed by a loan approval. I love how you explain it, a credit card, a housing homeownership credit card to go out and buy the home of your dreams. I always call it the home of your dreams. I believe every single person's home that they occupy is their dream home, because think of it this way. You can argue with me a million times on this. Go back 5 years from now. What home were you living in? If you're a first-time home buyer, you weren't living in a home you own, you're renting. So buying your first home is your dream home because you've dreamt of buying your first home one day. If it's a move-up home, when you were in your first home, you're dreaming of maybe that next home one day. So I think it's so important to prepare for that. And the reason why we prepare for that is Snohomish County, just like King County, one of the hottest real estate markets in America. Now, I've got friends in Dallas, Texas, and Austin, Texas in this industry, and their market's going the opposite way. It's going negative right now. Ours isn't. And so many other markets blew up. They outgrew their britches too fast, and now they're paying for it. We've just been steady Eddie, and we've got a lot of people that relocate here.
Yeah, we have so much industry here.
Yeah.
When you take the Microsoft, the Oracle, and the businesses that are here, and then the companies that service them, such as Starbucks or Costco that started here, which is national. Yeah. So the jobs are here. Well, we are the gateway to the Orient.
Yep.
We have Canada as an international part right there. So we're not going to be really affected like anybody else because there's so much industry.
Yeah. People come here and they see our blue waters and our green mountains, and it's worth paying for.
Absolutely.
Okay, let's wrap with this. What's the biggest mistake that you see sellers making right now in today's market?
I have to go back to hiring the wrong agent.
Yep.
They fail to plan, they fail to represent, and they fail to communicate.
Yeah,
that's the biggest one. And then I also have this as listening to inexperienced voices.
Yeah.
So that's the biggest mistake I believe that sellers make.
Yeah.
You can pave the way for success when you get the right person doing the homework on the front side. Because if all we're doing is throwing a sign in the yard, we have not done you a service.
Yeah.
There's so much more.
I love what you just said about inexperienced voices. And guys, that could be social media. That could be the internet. Because national stats do not represent the Stilly Valley. I can tell you that.
That is correct.
Yeah. All right. Biggest mistake you see buyers making right now in today's market?
Buyers making, thinking their realtor is their lender.
Oh, okay. Yeah.
Yeah. I get they're always asking me questions. I keep pushing it back to my lender.
Yeah.
I want them to be well versed.
Yeah.
And again, with the buyer, it's their livelihood kind of at stake.
Yeah.
They're putting all this time and energy and saving and just for this home.
Yeah.
And I'm going to do everything I can to help them come into this both eyes open.
Yeah.
But that mortgage that comes to them every 30 days is theirs.
Yeah.
And as much as I would love to answer, I've heard this by many lenders, Greg, stay in your lane.
Yeah.
And I need to stay in my lane, and I shift it back to, Dan or my lenders that I use to get them peace of mind. So every 30 days they get that notice, they're happy about it. So the mistakes that they make is reaching out and asking their realtor to be their one and all.
Yeah, I think when you're working with the right lender and you go through a process like we have here, it's, from a mortgage planning standpoint, we're budgeting, we're doing a financial discovery meeting. And so we're connecting the dots between the budget, their pre-approval, and then the bigger picture, which is we own a home. Homes are now purchased as an asset. They're going to go up in value. You buy a $700,000 home in Stilly Valley and it goes up 10% a year. You just made $70,000. Now, is that $70,000 you can realize? Yeah. If it falls under the capital gains laws where, we don't want to go off on a rabbit trail here, but this is real money. Your appreciation in home equity is real money. And when you understand all that goes into that and all that goes into living in these communities and managing your journey of homeownership and getting that approval and sticking within your budget, it makes the home buying process and experience just way more enjoyable when you're in the know. So I agree with you 100% there, man. All right. Well, this has been great. Greg's a pro. Stilly Valley, beautiful community. I encourage you to look it up. You have any questions on this community, you got an expert that lives in it, sells a ton of homes in this community. I want you to reach out to Greg at Windermere. What's the best way, whether it be social media or your website, for people to connect with you?
You know, you're talking to me, you're saying my name 100 times. GregByrum.com is the simplest way to find me.
How do you spell your last name?
Yeah, it's a last name B-Y, rum like the pirate drink.
Rum. So buy rum.
Just don't buy rum.
Yeah, Greg Byrum at Windermere.com, right? Or .com, sorry. .com. Okay.
Yep.
Well, I appreciate you taking time out of your day. It's the middle of the day. You got to get back to work. I got to get back to work. We'll look forward to seeing you on another episode of the Happy Homeowner Podcast this coming week. Bye for now.
Thanks.